This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. Bright and early Monday morning, start of a new week. I'm Prashant. With me, my colleagues Nigel and Sonia. Guys, hi, morning.
Hi, good morning, Prashant. Good morning, Nigel.
Morning.
And it's start of a brand new week. Looks like it's going to be a good one, given that the market momentum has been pretty strong. Earnings are not too bad. So let's see, we have our hands full. Global cues have been good as well.
Well, the markets are going to be, obviously the focal point, but I'm also going to keep an eye out on the India-England test match, right? It's interestingly poised out there. It appears we're on top, but we know what happened in the first test. So I'll keep an eye out there as well, and hopefully our boys come out on top. But Prashant, plenty
Well, that's a test. This is a one-day, right?
the
market. All right, let's just quickly tell you, just pick up from where we left off on Friday, because it's interesting how the market is poised. Number one, the Nifty cooled off significantly after making a new all-time high on Friday, last Friday, that is. And it was a significant cool-off. And by the end of it, 0.75% looks very strong day on day, but from the day's high, it looked like actually a bit of a disappointment. In any case, I mean, there were strong markets. US markets saw a decent rally on Friday. The S&P was up 1%. The Nasdaq was up about 1.7, 1.8% or so. So equities in the US did quite well. Super strong jobs data, and you had which basically indicated that the economy in the US is in absolutely great shape. The numbers will come up on your screen. 350,000 jobs, right? And I think this is the third January in a row, right? I mean, last three Januaries where the actual number has been double what the market was expecting. So, I mean, blowout numbers, 3.7 unemployment rate, which is actually very low, and average hourly earnings. All three things which the market watches very closely came in stronger than expected. Now, markets have been kind of embracing this idea. Even Fed officials have been embracing this idea that there will be a soft landing, perfectly orchestrated landing, not too hot, not too cool, etc. And, we'll just get through this without a hitch, without a problem. I think that is at a bit of a risk in that sense. That narrative is going to be challenged. And the implication for markets and interest rates is, in any case, March rate cuts are down to, the probability of a March rate cut is down next to nothing. But this further pushes out the view that unless data slows substantially, maybe rate cuts will be down the line. It's not exactly a bad thing for equities. I'll get back to it in just a bit. Bond yields, by the way, jumped, and they jumped 14 basis points, the 10-year that is, to about 4% plus. Dollar index is back at about 104. You had oil prices, which actually sold off on Friday by 2%, and we are at about $77 a barrel. So, markets on Friday in the US were driven by the jobs number, and bulk of the activity, the frenzied activity happened on the rate side more than the equity side, which were higher in any case. The reason I'm saying, very strong numbers in the US is not bad news. Actually, it might be at the margin good. Think about it. You've got the Fed, which will cut. They've said they're thinking they're not thinking about hiking. They're thinking about cutting. The question is one. So when? The point is, it's a wait. So you've got a Fed which is on hold, but which will cut. So it's not exactly a bad outcome for the markets in that sense. Now, for the Nifty, just to come back to the levels, 22,470 will be the target on the way up. Of course, we made a new high, but which is, of course, the first resistance which the market will need to cross. It was about a 2-point higher high on Friday as compared to the previous high. But if you extend, the 138% of the total fall comes in at 22,470. That's the target, at which point you'll have to ask the question, has the market completed something? Support comes in at 21,747. These are levels around which, one would feel much more comfortable in terms of trading, getting in closer to these levels and not trying to chase the move up. Just one point, FII short positioning has come down. It's not come down massively, but 5 days back, it was 100,000 plus. It's about 75,000 odd contracts over the last 5 trading sessions. Bank Nifty's retraced 61.8% of the recent fall, and then it also saw selling pressure on Friday. The high on Bank Nifty on Friday, which is 46,892, becomes the first level which that index needs to cross on the way up. On the lower side, it should not break 45,850, which is again a retracement level. The GIFT Nifty will come up on your screen. I think there is a bit of profit taking, which is indicating about a 36, 37 odd point lower start, but neither here nor there in that sense. Sonia.
By the way, I thought, you guys are going to start by talking about that Apple Vision Pro and all the memes around it, right? It's spectacular.
Unreal.
Yeah, the price is unreal as well. I think.
You want something unreal, Sonia, you have to pay an unreal price for it,
I
right?
agree. So are we going to be sitting with, in the future, in the next 5 years, and no one's going to be seeing anyone
the
anymore?
good thing about that is, no, actually, we can't be sitting, right? The viewers have to be sitting.
The viewers will be sitting.
I mean, they can be anywhere. They don't have to be in front of the television screen. And we can be beamed into the glasses or whatever.
Yeah,
but it's crazy.
Technology is really evolving rapidly. Okay, we'll talk more about that later. But I think the momentum in the market does continue. And you can see that on the screen. You can see that with the Nifty hitting record highs on Friday. Of course, it came off from the highs. But nevertheless, if you look at the numbers as well, right, the flows, both foreign and domestic institutions bought in the cash markets on Friday. DI has bought almost 2,500 crores. So the money is coming in thick and fast. Now, the US markets were positive. It's been records after records for the Dow and the S&P 500. Dow was up 130 points on Friday as well. The only problem, as we've been telling you, is that the bond yields have been moving higher. So that's a bit of a sticky point. But otherwise, all the global factors, crude has been falling as well. So all that is in our favor. For our own markets, we've had some strong earnings that came through post-market hours on Friday. Tata Motors, Interglobe Aviation, Delivery. In fact, Tata Motors had multiple price upgrades. We'll talk about that later. JLR's guidance has been raised yet again, so that is important. And the management commentary was very, very positive. So Tata Motors is a stock to watch. Of course, it has been hitting new highs, so maybe some of that is already priced in. SBI was only the only sore thumb in this quarter's earnings. Weak earnings coming through. The operational miss came through because of that one-time pension provision, so we'll keep an eye out on that. But otherwise, very good set of numbers. Delivery reported its first ever profits. You have Indigo that reported a fifth consecutive quarter of profitability. So lots to talk about there. In earnings today, you have names like Bharti, Ashok Leyland, Tata Chemicals that will be reporting their numbers. So, the stage perhaps is set for the market to inch up higher. But looks like it's going to be a slow grind. This morning, at least, the Gift Nifty is a bit low on the lower side. But otherwise, the internals are all looking pretty strong for this market.
Well, that's right. So I just want to put a couple of data points. So I'll just hop across to the wall to make those points. The Nifty had a good session, mind you. But that knockout punch actually was missing in Friday's trading session. And the Nifty Bank as well, it looked good actually for majority of the week. But the problem was, it couldn't build on that. And it came off considerably as well on Friday's trading session. Well, this is something that I want to put out for our viewers. The Nifty, all of last week, we saw it gradually move up. And just take a look at the short positioning. That kept coming in lower. So the short positioning from around 108 lakh contracts on the short side by the FIs, that came down to around 75,000 contracts. And by the way, the Nifty as well moved up. So as we always say, that the FIs being net short is not such a bad omen for the markets. What did they do on Friday's trading session? There was a delta of close to around 5,000 contracts because they added some mild long positions and they covered some shorts as well. Though they continue to remain net short with close to around 67% of their positions on the short side itself. Let's focus on a couple of key aspects. Sometimes your top batsman is not in form. So you say, let's, give it a bit of a rest and maybe hand over the baton to a couple of other players. That could be what's happening for HDFC Bank. Remember, it's the largest weight both on the Nifty as well as the Nifty Bank. And in the near term, maybe it's lacking those positive triggers. So just take a look at what's happened. On the Nifty Bank itself, we could possibly be having ICICI Bank that overtakes HDFC Bank. That may not be such a bad thing because you want to give, more of the strike to the batsman that's in form. And it appears, in the next few days, we could be bracing for that. Even on the Nifty, the Reliance Industries stock, well, that's been creeping up. From September itself, the gap between both them in terms of weightage was around 300 basis points or 3 or 4% odd. That's gradually started getting narrowed down as well. So that's another data point out there. Maybe HDFC Bank may be set to go ahead and, in fact, lose the top spot both on the Nifty and the Nifty Bank. What about the Nifty Bank? Well, the Nifty Bank seems to be facing resistance in that vicinity of around 46,500 because we visited that mark on Friday. We came off that mark and the 20 and the 50 DMA, intraday we did go higher than that, but we couldn't conquer that. So those are the crucial resistance levels on the Nifty Bank itself. Moving to the Nifty, well, we had, the 21,600 put that was fairly active. Big open interest build up. You had premium out there as well at around 57 rupees odd. And it appears that at least as of now, the 21,500 level, that's a crucial level on the downside. On the upside, the recent high that we made, 22,200 approximately, that's going to be the broad range for the Nifty itself. So that's about the key indices. The stock that I'm tracking today, going by the delivery data, as well as what's taken place in the F&O market, is ABFRL. in the last 1 year, it's been a rank underperformer. It's still lower than what it was a year ago. We're talking about this big party in the broader markets. Besides that, the delivery action out there was quite encouraging. Delivery volumes double of what we have seen. So, that's one factor. And even in the futures market, you had a massive surge in terms of open interest. In the past week, the open interest built up was to the tune of close to around 25%. So going by that, that's a stock that I'm tracking, guys.
All right. Thanks a lot, Nigel, for that. So lots in the news this morning. Let's kickstart the show very quickly. On the equities front, first up, we have Chetan Seth of Nomura, who says that there is now appears an increasing likelihood of a soft landing, Goldilocks for the US economy. He says this sets a positive backdrop for stocks, including some Asian markets such as India, Korea and Taiwan, while local factors are likely to be more dominant for other markets, including Hong Kong and China.